Very good morning, everyone. How are you all? I hope everyone is doing great. Today we are taking lecture number 2 for corporate financial reporting paper. Last day we started our first chapter, that is chapter number 17, valuation. In that we are doing unit number 1, valuation of goodwill. The last class we have done only the method to calculate goodwill. We have done the formula and we have also done how to calculate future maintainable profit. Let us first revise that. So what are the methods for valuation of goodwill? We have understood that there are 4 methods for valuation of goodwill. First is what? Average profit method. Second is super profit method. Third is capitalization method. Fourth is annuity method. What is the formula for average profit method? Goodwill is equal to future maintainable profit multiplied by number of years purchased. Then super profit method. What is the formula? Goodwill is equal to super profit multiplied by number of years purchased, where super profit is equal to future maintainable profit minus normal profit, where normal profit is equal to average capital employed multiplied by normal rate of return. Then we have discussed annuity method. There are 2 ways, either to find out annuity of super profit or annuity of FMP as per the information given the question. If question is silent, will follow annuity of super profit. In that case, goodwill is equal to super profit multiplied by annuity factor. In case of annuity of future maintained profit, we'll do goodwill is equal to FMP multiplied by annuity factor. Then the last method was capitalization method. It will be used only when number of years purchase is not given. Got this point? It can be capitalization of super profit or capitalization of FMP as per the information given in the question. If question is silent, we'll use capitalization of super profit. So in that case, goodwill is equal to super profit divided by NROR, normal rate of return, or what we can do, FMP divided by NROR minus average capital employed. However, in case of capitalization of FMP, the formula to calculate goodwill will be equal to FMP divided by NROR, means normal rate of return, minus closing capital employed. Then we have also understood how to calculate FMP. So to calculate FMP, I said it is an estimated future profit based on past year profit. In your question, they will give you some past year profit. Suppose they have given profit after tax of some few past year. It can be 3 year. Okay. So we write down profit after tax. We'll add tax expense and we'll get PBT. Then we'll do some adjustment to find out adjusted profit. What are the adjustment? First adjustment will be for non-operating item. So any non-operating income will be deducted and non-operating expense will be added, which has been already transferred to PL account. Means any non-operating item which is already transferred to PL account, that adjustment we are doing. So we'll eliminate minus non-operating income, will plus non-operating expense. Then second adjustment is for abnormal loss, abnormal item. We will do plus abnormal loss minus if any abnormal gain is there. Okay. Then we'll do adjustment for non-recurring item. So plus non-recurring expense minus non-recurring income. Then we'll do any adjustment for any error. So we'll do the rectification of error as per the information given in the question. If it will increase the profit, then plus profit. If it will decrease the profit, then minus profit. Okay. Then we'll do adjustment for revaluation gain or loss on current asset and current liability. It can be gain, it can be loss. Gain will be added, loss will be deducted. The last adjustment is for amortization or impairment loss of goodwill. So if suppose there is some goodwill given the balance sheet and we have done amortization or we have charged impairment loss to PL account, so we will add back that. So plus amortization or impairment loss of goodwill, because we want profit before amortization of goodwill. So these are the adjustment. I hope you have understood. We will get adjusted profit. Now whatever adjusted profit we have got for the last few years, we'll find out average profit. This average profit can be either simple average or weighted average. Simple average or weighted average. Now simple average, weighted average depend upon the trend. If they have given profit percentage, then trend will be identified from the profit percentage. If the profit percentage have increasing or decreasing trend, then we'll apply weighted average profit. If the profit percentage do not have any trend, then we apply simple average. But suppose profit percent is not given, then we identify trend in the adjusted profit. If the adjusted profit is increasing or decreasing, if it has increasing or decreasing trend, then we apply weighted average profit. Otherwise, we go for simple average profit. Okay, so we have understood this point. This is known as average maintainable profit. So sometimes average maintainable profit and future maintainable profit are considered as same if no other information is given. So if suppose no other information is given, this only will become your FMP. So average profit and FMP are interchangeably used for this chapter. So sometime I will call it average profit, or sometime I will call it FMP, future maintainable profit. So after this, if suppose they have given any future additional income, future additional expense, so we'll do plus income minus such expense. There can be any additional depreciation or revaluation PP. So if there is such item, we'll do minus additional depreciation on PP. But till now we have not discussed this point. We'll discuss on our later part. This will be FMP before tax. From this will minus future tax as per the rate of tax given the question. This will be FMP. So this will be known as future maintainable profit. Okay, sir. I think this much we have done. Okay, sir. Now let us first take one question. Then we'll come to our next discussion on capital employed. Come to question number 10. I have taken some question of ICMAI resource for better understanding of this concept. Okay, yes sir. Chalega, yes sir. The balance sheet of Hari Private Limited disclosed the following position on 31st December 1994. You can see they have given share capital, subscribe, preference share capital, ordinary share capital, general reserve, profit and loss account, trade creditor. Then they have given random building, plant and machinery, stock, debtor, cash at bank. Okay, sir. It is proposed to convert Hari Private Limited into public limited company, and for this purpose you are asked to value the goodwill of Hari Private Limited. Okay, we need to value the goodwill. Hari Private Limited was incorporated on 1st Jain 1986. It is a very old question, and its first account were made up to 31st December 1986. Can I say it is of no use? The incorporation date is bakwas information. It is only given to waste your time. It manufactures abrasive material, environment, technical skill, and it has engaged 2 foreign experts since 1986. Bakwas information. This is also totally bakwas. No provision for taxation required. Okay, there is no provision for tax. The fixed asset of company have been adequately depreciated. Means depreciation has been charged correctly. So this information is also bakwas. You can see A, B, C, D. This 4 information is not at all required for the valuation of goodwill. The present market value of land and building is 5 lakh and of plant and machinery is 6 lakh. So this information is required to find out capital employed. So of course in this question we will also calculate the capital employed. How to calculate capital employed, that I will help you out. The profit and loss of the company for the last 3 years after charging depreciation and taxation have been as follows. So you can see they have given profit after tax of the last 3 years. Okay. The sales of the company during the last 3 years is itna. So sales is given. Just try to understand, whenever sales is given, it means you can find out profit percentage. It means you need to identify trend in profit percentage, not in adjusted profit. The reasonable return on closing capital employed, closing capital invested in the class of business carried on by Hari Private Limited is 10%. It means they have given normal rate of return. This is normal rate of return, but they have given normal rate of return on closing capital employed. Whenever they say normal rate of return is on closing capital employed, it means closing capital employed will be used to calculate your normal profit. So in this case, it is an indication that you will not use average capital employed, you will use your closing capital employed to find out normal profit. Understood? Got this point? Because we need to respect the information given the question. You can't go against the question. Now NROR is based on closing capital employed. It means your normal profit is based on closing capital employed, not average capital employed. So this is very important. We can't go against the information given in the question. Okay, sir? Yes, sir. Then it may be assumed that company will be able to maintain its profit for the next few years on the same level as in past. Wherever appropriate, you may make suitable assumption. So we need to make suitable assumption. This chapter is full of assumption. Whenever you have doubt, you take assumption only. All working should form part of your answer. Okay, sir. So this is a question. Let us do it. We are doing question number 10. Question number 10. First we'll calculate calculation of FMP. They have given how many years? 1992, 1993, 1984. They have given profit without any adjustment. So there is no adjustment. So this profit will be only adjusted profit. Got this point? Because there is no adjustment given the question. What adjustment will do? If no information is given, you can't adjust it now. So this profit will become adjusted profit. Okay. So how much it is given? 1 lakh, 1,000, 1 lakh, 50,000, and 1 lakh 60,000, 69,000. And they have also given sales. Sales is given how much? Is given 12 lakh, 99,000, 13 lakh, 77,000, and 18 lakh, 22,000. So they have given these also. Okay. Now, because they have given sales, we can find out profit percentage. So how much profit percentage? Is 1 lakh 1,000 divided by 12 lakh 99,000. It is equal to 7.78%. Then 1 lakh 50,000 divided by 13 lakh 77,000. It will be equal to 10.89%. Then 1 lakh 69,000 divided by 18 lakh 22,000. It is around 9.2. It is 9.28%. 9.28%. Okay. 1 lakh 69,000 divided by 18 lakh 22,000 is 9.28%. Okay. Got this point? You can see they have given this information and I have taken this information to find out what? Profit percentage. Now we need to see the trend in what? Profit percentage or adjusted profit. You can see if you apply trend in adjusted profit, so your adjusted profit is increasing. But you can see in profit percentage it is increasing and this is decreasing. So it means there is no trend in profit percentage. Therefore, we'll apply simple average profit, not weighted average profit. So in this case, we need to apply trend in profit percentage, not in adjusted profit. Got this point? To look at since there is no trend in profit percentage, we should calculate simple average profit. What is your average profit? And this average profit will become FMP because there is no additional information. This average profit will become FMP. It is now 1 lakh 1,000 plus 1 lakh 50,000 plus 1 lakh 69,000. Total is what? 4 lakh 20,000 divided by 3 is equal to how much? 1 lakh 40,000. Okay, sir. Now can you see we need to also calculate closing capital employed? Madam, calculation of closing capital employed. We'll call it as a CCE. Why we are calculating closing capital employed? Because we want this as per the information given in the question. Okay. In simple word, closing capital employed means all asset at fair value, current value, minus all liability at current value. You need to take all asset minus all liability at current value at fair value. Okay. Yes, sir. So whatever fair value information is given, we'll take that. If fair value information is not given, we'll assume book value and fair value are same. Can we do this? So we'll start from all asset coming to what? Land and building. So for land and building and plant and machinery, they have given the fair value information. You can see they have given land and building how much? They have given land and building 5 lakh. And for plant and machinery, they have given 6 lakh. We will take this information. And for other assets and liability, we'll take book value. Okay, sir. Yes, sir. Madam. We'll take land and building. How much? 5 lakh. Then plant and machinery 6 lakh. Then we have stock. This will be at book value 2 lakh. Then we have debtor. Debtor is 2 lakh. Then we have bank balance. Bank balance is 1 lakh. So this become total asset. Total asset at fair value is how much? It is 5 plus 6 plus 5 is equal to 16 lakh. From this we'll deduct liabilities, to write down less liabilities. We have only one liability from my point of view. Let us check what the liability is given. Only creditor is given 4,50,000. Write down liabilities. We have only trade creditor, and that is 4,50,000 minus 4.5 is equal to 11,50,000. So we have 11,50,000. This become closing capital employed. So why you are calling it closing? Because can you see this is the assets and liability as on year end, and therefore we are calling it closing capital employed. Okay, sir. And so why we are not calculating a average capital employed? Because the question is given nominator denominator is based on closing capital employed. Okay, sir. Now we need to find out goodwill. Madam. Now we need to find out goodwill. Correct. Now just try to understand. Now the question arises, we need to use which method? We need to use which method? Whether we should use super profit method or annuity method or capitalizer method. Just try to understand. First, the question is silent about method. You can see no information has been given for which method, but you can see number of year purchase not given. Whenever number of year purchase is not given, we always calculate goodwill by using capitalization method. Okay, understood. Now one thing is clear that because they have said the reasonable return on closing capital invested means, can I say we need to use closing capital employed? That gives an indication that we need to use capitalization of FMP. Capitalization of FMP. Got this point? So here we are using what? Closing capital employed. Are you able to understand? Got this point? To write down. What we will do? Calculation of goodwill by using capitalization method. Goodwill is equal to FMP divided by NROR minus closing capital employed. What is the FMP? FMP already we calculated 1,40,000. 1,40,000. NROR how much? 10%. Closing capital employed 11,50,000. Okay. This become 14 lakh. 14 lakh minus 11,50,000. Correct. What is the difference? 14 lakh minus 11,50,000. It is 2,50,000. So your goodwill become 2,50,000. So it is indication when they say closing capital employed, it means we need to calculate capitalization. We need to calculate goodwill by using capitalization of FMP. That only we have done. Have you understood? Have you understood this point? Super easy. Any doubt? So this question I have done only for giving some idea how to calculate closing capital employed. Now we'll discuss how to actually calculate average capital employed. To come to next concept. Write down. Calculation of average capital employed. Calculation of average capital employed. So in this also there are two ways. Write down. Method 1. We need to calculate average of average capital employed of past years. Average of average capital employed of past year. Correct. It means we need to calculate what? Means can I say we need to first find out closing capital employed of all the past year. Then we need to find out average capital employed of all the past year, and then we need to make average of average capital employed. You have not understood. Let me take one example first. Write down. This method will be used only if question provide balance sheet of all past years. Correct. Now just try to understand, if they are given 4 past years, so we need to have balance sheet of all the past years so that you can find out closing capital employed of all the past year. Got this point? And technically speaking, if I will say they will give you 4 balance sheet, the question will be lengthy, and therefore normally this type of question we do not find in exam. Normally because of this reason, but this is the actual way. We need to have balance sheet of all the past year. Got this point? Example, right now. Example. Suppose this is year 1, year 2, year 3. Correct? Y1, Y2, Y3. Correct? And they have given capital employed. Capital employed of all the past years given. Correct? Suppose it is given 1,20,000, 1,50,000 and 2 lakh. And we have also opening capital employed of the first year. So these are the information given. So can you say this become opening capital employed of the first year, and this is the closing capital employed of the first year, and this will become opening capital employed of second year, and this will become closing capital employed of second year. This will become opening capital employed of third year, and this is a closing capital employed of third year. Are you getting what I am saying? So from this we'll calculate average capital employed of each year. So we'll calculate now average capital employed. So average capital employed will be what? Opening plus closing divided by 2. So opening plus closing divided by 2, it is coming how much? It is 2,20,000 divided by 2. So this will become how much? 1,10,000. So this will be 1,10,000. For the second year, it will be 120 plus 150. So 120 plus 150 divided by 2 is equal to 1,35,000. And for the third year, it is 150 plus 2 lakh. So 150 plus 2 lakh divided by 2, it is 175,000. So this is the average capital employed of all the past year. Now we have to calculate average of average capital employed. So now we'll calculate average of average capital employed. Average of average capital employed. Now it can be either simple average or weighted average. So either we'll go for simple average. If I am saying simple average, so it will be sum total of these 3 divided by 3. It will be 1,10,000 plus 1,35,000 plus 1,75,000 divided by 3. How much it is coming? 110 plus 135 plus 175 divided by 3. It's coming 1,40,000. 1,40,000. Or we can go for weighted average. Or we can go for weighted average. Weighted average. So weighted average, we need to give more weight to recent year. We will say 1,10,000 into 1 plus 1,35,000 into 2 plus 1,75,000 into 3, and let us divide by the sum total of weight. So this is coming how much, bata? It is 1,75,000 into 3 is coming 5,25,000. Then plus 2,70,000. Then plus 1,10,000. It is coming 9,05,000. It is coming 9,05,000 divided by 6. So what is the weighted average, bata? Divide by 6. It is coming 1,50,833. You will get different answer. If I am using simple average, you have understood. Weighted average, we have understood. But when to use simple average or weighted average, that will depend upon the calculation of FMP. For calculation of FMP, if you have used simple average, then here also simple average. For calculation of FMP, if you have used weighted average, here also weighted average. So this will based on FMP calculation. Based on FMP. So just see, for FMP you have taken simple or weighted. So if there you have taken simple, here also simple. If there you have taken one weighted, here also weighted. This is the first method. Understood? Can you say this capital employed you can find out from the balance sheet, all asset minus all liability? That is information will be given. But can you say in this the solution will become too lengthy, and normally this type of question they don't provide. Normally they don't provide this type of question, but this is the best method, I will say. This is the best method. So in this chapter actually we'll use always in exam the method which is not best. Means the best method will be having limited use. That will be do only when such information is given the question. So what is second method? That is method number 2. Method 2. So method number 2 is what? Average capital employed of average capital employed of immediate previous year. So in this case, we'll calculate average capital employed of immediate previous year. Are you getting what I am saying? Immediate previous year means I am saying immediate last year. Average capital employed of last year, you can say. Means what I want to say. If I am, this is the first year, second year, third year, and this is Y3, and we are doing valuation of goodwill as on year end 3. Correct now. So we'll calculate average capital employed of this year, because as on this date, this is only immediate previous year, na? Immediate previous year. Better write on last year. Immediate past year better write, na? Better immediate past year. Better. Immediate past year. Okay. So for this year, we'll calculate average capital employed. This we can calculate as per the information given the question. So there can be two situations as per the information given the question. Write on situation 1. Situation 1. Correct. If closing capital employed, if closing capital employed of last two past year is given, or we can say in this way, opening capital employed, opening and closing capital employed of last past year is given. Given means we can say this is the closing capital employed of this year, and this is the closing capital employed of this year, and this closing capital employed is nothing but opening capital employed of this year. Either we can say the closing capital employed of last 2 years is given, or opening capital employed and closing capital employed of the last year is given. Both are same or not? Yes sir. In this case, average capital employed will be opening plus closing divided by 2. So in this case, average capital employed will be equal to opening capital employed plus closing capital employed divided by 2. Super easy. Understood? This becomes situation number 1. So if they have not given the capital employed of all the last past year, then we will see whether they have given the opening capital employed and closing capital employed of last past year. If yes, they will calculate average capital employed of last year. Got this point? Situation number 2. Situation number 2. If closing capital employed of last past year is given, correct? Closing capital employed of last past year is given, means only the closing capital employed of last year is given, immediate last year is given. Got this point? Means opening capital employed is not given. In that case, how to calculate average capital employed? So for that we have one formula. Right on. If this is the case, and this is the situation which will be the most used in all the questions. Right on. Mostly used in the question. In this case, right on, average capital employed will be calculated as under. So in this case, average capital employed will be calculated as under. How? So what we will do? First we write down closing capital employed whatever is given. In this we will do minus half adjusted profit after tax of last year, and this will be the average capital employed. This will be the average capital employed. So now you know what is adjusted profit. Now you know what is the adjusted profit. Already we calculated when we are doing FMP calculation, we have calculated adjusted profit of last year. We'll take half adjusted profit after tax of last year. We'll do minus and we'll get average capital employed. So we have not understood. Let me explain. Let me explain this formula. Suppose this is the last year. This is 1/4 and this is 31st March. And 1 lakh is the opening capital, and the net profit earned during the year is 50,000. So closing, if suppose there is no drawing, let's say there is no drawing, correct? It will become 1,50,000, correct? So what we'll do? Average capital employed will be 1 lakh plus 1,50,000 divided by 2, that will be how much? 2,50,000 divided by 2 is what? 1,25,000. Either we'll calculate in this way, or can I say in this way? The average capital employed will be equal to closing capital employed minus half profit after tax. So closing capital employed is 1,50,000 minus half of net profit. Net profit is after tax only. It is half into 50,000. Same answer we are getting. Same answer we are getting. And this particular technique we have applied in our situation number 2. Got this point? But in this we have taken one assumption. What assumption we have taken? If dividend is not paid during the year. Because if dividend is paid, so it will affect. So we have taken one assumption. Assumption dividend is not declared during the year. That assumption we have taken. So normally in exam they don't ask any question about dividend paid. So we'll ignore that. We'll go as per examination point of view. But I hope you are understanding this formula now. Got this point? This was about average capital employed. But you can see to calculate average capital employed, we need to understand how to calculate closing capital employed. How to calculate closing capital employed. So now write down calculation of closing capital employed. Write down. Calculation of closing capital employed. Okay, sir. Chalega. So in this first we write down all asset minus all liability. Write down. In this we'll take all assets at fair value less all liabilities at fair value. So this will be known as closing capital employed. Closing capital employed. Correct. You can see I have given a specific attention to fair value. It means all asset, all liabilities should be at current value. Current value will be given in the question, but if that value is not given, take book value. Okay, so just write down some note. Write down note. Note number A. If fair value now whenever I write on FV in my class, it means fair value. It is not face value, it is fair value. So whenever I am writing FB, you need to understand it is fair value, not face value. Okay, sir? Yes, sir. So if the fair value is not given for any asset or liability, correct? Then consider at book value. We need to consider that assets and liability at book value. Book value means carrying amount. Book value means carrying amount. Simple. Correct. Now just try to understand whenever I say closing capital employed, it means the capital which is invested in business. So it might be there might be some assets which are not invested in business. Correct now. So closing capital employed means it means invested in business. There may be some assets which are actually non-operating, correct? For example, non-trade investment, or there may be some investment property which are used for earning rental income. So rental income is non-operating income, means from any asset from which we are earning some non-operating income that is actually invested outside a business, so that should not be considered. So here all assets, there should be a star mark, so just write down not all assets. So note number B, write down all non-trade investment, non-trade investment, for example, investment property, investment property. Investment property means any property which are held for either capital appreciation or for rental income. Correct? We'll understand in better way when we'll do some Ind AS on this particular investment property. But I hope thoda thoda you have understood. Or investment in shares of other entities. Correct? Are not considered for calculation of closing capital employed. Are not considered for calculation of closing capital employed means we should not add this type of asset. Okay. Now, if suppose in the question they have given only investment, what we should assume whether it is trade or non-trade. Means one thing is clear that trade investment should be added. Okay, just write down. If question is silent, always assume investments are non-trade. Investments are non-trade. Okay, sir. Chalega? Yes, sir. This much you understood. Now, point number C. Special point about goodwill. Now, there may be some goodwill appearing in the balance sheet. Now, we are calculating goodwill. So, one doubt will come, sir. Should we add goodwill or should we not? Should we ignore goodwill to find out capital employed? Okay, just write up. Goodwill appearing in balance sheet. Now, actually, there are two types of goodwill. Point number A. If such goodwill arises in case of business combination, So what is business combination? Business combination is one chapter we'll do in detail, but for the time being, it is nothing but amalgamation of company. So whenever two or more than two companies join together, one company absorb another company, so that is known as amalgamation or business combination. In that case, our Ind AS 103 said that we need to find out goodwill, and goodwill will be recognized in the balance sheet. Means in this case, goodwill is recognized in the balance sheet. Correct? That's right. This is nothing but we can call it purchased goodwill. This is nothing but purchased goodwill. If this is the case, it will be added to the closing capital employed. Means it will be added to find out closing capital employed. Okay. In this case, write down it will be added to calculate closing of the employed. Why? Because can I say it is just like another asset? It is just like another asset because it arises in case of business combination. Okay, but if such goodwill is self or internally generated, so as per Ind AS 38 or AS 26, I hope you have done AS 26. We can't recognize that type of goodwill. So self-generated goodwill cannot be recognized. If it cannot be recognized, how can you add to calculate closing capital employed? Okay, sir. If such goodwill is self or internally generated, okay. Now one doubt will come, so if it is self-generated, how can you recognize in the balance sheet? There might be some error in the question. So they have given the balance sheet where in the balance sheet they have written self-generated goodwill is recognized. So we are here to understand it is self-generated, cannot be recognized, so should not be added. Should not be added. We in this chapter just try to understand. We are not here to find out or correct the balance sheet. From whatever balance is given, whether correct balance sheet or wrong balance sheet, we need to find out the goodwill. So we are not here to correct the balance sheet. We are here to find out correct goodwill, this value of goodwill correctly. So whatever information is given balance sheet, that we need to use. So they have given goodwill, calculator recognize it is error, but we are not here to prepare the correct balance sheet. Got this point? Yes, sir. If such goodwill is self-generated or internally generated, it will not be added to calculate closing capital employed. If question is silent, always assume this. If question is silent, assume self-generated. Sir, why? Once again, as per standard assumption. If the question in the question they have goodwill, nothing has been given, we'll always assume it is self-generated, we'll ignore it. Okay, sir. Then point number D. Proposed dividend. Now, do you know about proposed dividend? We will do Ind AS. We will do Ind AS where we'll understand that proposed dividend cannot be recognized. I hope if you have done AS4 as per AS4, we can't recognize proposed dividend because it is not a liability. So whenever dividend is proposed, there is no obligation to pay. Obligation to pay will arise only when it is declared by the company. So right now it is only a proposal and therefore it is not a liability. So what I just want to say, proposed dividend is coming in the balance sheet. It is an error. We can't recognize it. But once again, we are not here to rectify the balance sheet. Proposed dividend, what I just want to say, if it is recognized, if it is coming in the liability side of the balance sheet, it is not a liability. It is not a liability and therefore do not deduct to find out closing capital employed. Okay. The proposed dividend is not a liability. Correct. And therefore will not be deducted to calculate closing capital employed. Okay, understood. But sometimes they give unclaimed dividend. Unclaimed dividend is a liability. Unclaimed dividend is a liability. Just write down. However, unclaimed dividend is a liability. Chalega? Yes, sir. So this was regarding closing capital employed. Now we are in a position to take questions. Can we take the questions? Okay, sir, we'll take some questions so that we have some practice. Come to this much you have written. Okay, sir. You write down. Just let us come to question number 11. Can we come to question number 11? Yes, sir. What is given? On the basis of following information, calculate value of goodwill of G Limited at 3 years purchase. 3 year purchase, so number of year purchase given of super profit. It means super profit method. If any earned by the company in the previous 4 completed accounting year, so they have given past 4 years. CA capital authorized. Authorized is not at all relevant because authorized capital will be only for disclosure purpose. Just try to understand. Now in your exam they will give you vertical balance sheet. For a company we have only vertical format. Correct. Now this I have given to save page. This format I have given to only save page. Okay. Yes, sir. Issued and subscribed 5 crore equity shares or rupees 10 is fully paid up 5,000. Capital reserve, general reserve, surplus of PL appropriation account, trade creditor. Trade credit is a liability. Provision for tax is liability. Proposed dividend is not a liability. The proposed dividend is not a liability. Then goodwill. If the question is silent, so in this the question is actually silent, so it will not be considered because it will be assumed to be self-generated. Land and building will be taken, machinery will be taken, furniture and fixture will be taken, patent and trademark will be taken. 9% non-trade investment will not be taken because it is non-trade. Stock will be taken, data will be taken, cash in hand will be taken. Preliminary expenses. Now, preliminary expenses is actually one type of expense which should be charged to PL account. So if it is coming in the balance sheet, it means it is not yet charged to PL account. But can I say it is just like a loss, and loss cannot be an asset. So this is loss which cannot be considered asset. So any expense which is not yet charged to PL account may appear in the debit side of PL account. But now as a rule, AS 26 as well as we have Ind AS 38 is say that this type of expense should be charged to PL account immediately. So now it is quite possible because this is a question of past, brother. I will say very old question it is. So now whatever question you will get in that you will not get preliminary expense. But if it is coming, it is not an asset. Okay, yes, sir. The profit before tax of the 4 year have been as follow. Year end 31st March, they have given profit before tax. It is profit before tax in lakhs. So they have given 4 year profit. Okay, sir, they have given 4 year profit. The rate of income tax for the accounting year 1999-2000. So 1999-2000 is first year, it was 40%. Thereafter it has been 38% for all the year so far. After that it become 38%, 38%, 38%. But for the accounting year 3-4, 3-4 means future year. So this is the actually 35% of future year. So this is the future tax rate. This is the future tax rate. Can I say because they have given already they have given PBT, this information is not relevant. Not relevant. Why it is not relevant? Because we want PBT. Because if suppose they have given PAT, so in PAT we need to add tax expense, then only we'll get PBT. But in this question they have already given PBT, so this tax rate is of no relevance. It is of no relevance. Right now it is not relevant. Okay. In the accounting year 1999-2000, the company earned an extraordinary income of 1 crore. So 99-2000. So 99-2000 means first year there is some adjustment extraordinary income due to special foreign contract. So there is some extraordinary income which will not happen every year. We need to eliminate it. In August 2000, August 2000 means 2000-2001. So in this year, there was an earthquake due to which the company lost property worth rupees 50 lakh. So can you say this is one type of abnormal loss or non-recurring loss? And the insurance policy did not cover the loss due to earthquake or river. This need to be adjusted. 9% non-trade investment appearing in the above balance sheet were purchased at par by the company on 1st April 2001. From 1st April 2001. So guys, 1st April 2001 means this is the beginning of that year. Sorry, 1st April 2001 means this is the beginning. 1st April because this is 2001, 2002. This is 2000, 2003. So it means the non-trade investment was purchased in the 3rd year. Got this point? And 9% was the interest. So 9% we can calculate on this 600 ka 9%. This become non-operating income that need to be also adjusted. So this need to be adjusted. In this 2 year, the normal rate of return of the industry in which the company is engaged is 20%. So NROR is given. Also note that company shareholders in the general meeting have passed a resolution sanctioning the directors an additional remuneration of 50 lakh every year beginning from the accounting year 2003-2004. 2003-2005 future year means they have given additional future expense. Got this point? All points I have done. Now only we need to calculate. Can we do fast? We are doing question number 7. Question number 7. Okay. First we'll do calculation of FMP. Calculation of FMP. So what are the year they have given? We can say it is 2000. So it is actually 1999, 2000, then 2000, 2001, then 2001, 2002, then 2002, 2003. Okay, sir. All the information are given in lakhs. You can write down rupees in lakhs. Now they have given PBT, profit before tax. How much PBT they have given? They have given 3190, 2500. Then it is 3108. And then it is 2900. Then we'll do adjustment. So for the first year they have given there was some extraordinary income that we need to eliminate to write a minus extraordinary income. What was the amount? So all figures are in lakhs and they have given it is 1 crore. 1 crore you need to convert. Normally when you are not reading the question carefully you write a -1. That mistake you can do. So in exam it is totally a mind game. Normally institute will confuse you by giving what? Crore, lakhs like this. Okay, yes sir. So this is 100 lakhs. So minus 100. Minus 100. Then the next point they have given about loss due to earthquake. Madam, any loss due to earthquake will be also eliminated. We'll add back. What is the amount? Amount is what? It is 50 lakh. Okay, sir. For the second year, 50 lakh. We'll add 50 lakh in this. I am of the view that you are understanding why in this year, why in this year. That is as per the information given the question. Then one more adjustment we have about non-operating income. There are non-operating income. It means this is income on non-trade investment. So our non-trade investment is actually 600 and the rate of interest 9%. So 600 ka 9% it is how much? 54 and it was purchased at the beginning of third year. It means it will come in third year and fourth year. We will do minus 54 and minus 54 from the third year and fourth year. So this will become adjusted profit. This will become your adjusted profit. How much? It is 3090, then 2550, then is 3108 minus 54. It is 3054. 3054 and then 2900 minus 54. It is equal to 2846. 2846. Okay, sir. Any doubt? Now we'll calculate average profit. So just see whether profit percentage is given. You can see in this question there is no information about sale, so you can't calculate profit percentage. However, most of the questions you will not be given profit percentage. It means you need to apply trend in the adjusted profit. You can see it is actually decreasing, then increasing, then decreasing. So there is no trend, and therefore we'll apply simple average profit. Okay, simple average profit. Why? Since there is no trend. Since there is no trend, what do you do? add 3090 plus 2550 plus 3054 plus 2846 is equal to, it is 11,540 divided by 4, it is 2885. This is average profit. Okay sir, chalega. Now from this we'll deduct, there is one additional manager remuneration that is given in the last para, so minus additional director remuneration. What is the amount? Amount, check it. What is the amount? It is 50 lakh. So deduct 50 lakh minus 50 lakh. So this will become FMP before tax. It will be FMP before tax because we have started with PBT. So this will be also before tax. So minus 50 is equal to how much? This 2835. From this we'll deduct tax expense. Less tax at future rate. What is the future rate? Already I have informed you. They have given future year 35%. So at a rate of 35%. At a rate of 35%. Okay. So into 35%, it is how much? 992. So you can 992.25. So approximately you can say 992. Correct? Minus equal to. So what is the remaining? It is 1843. So this become FMP. FMP we have calculated. Any doubt? Have you understood FMP calculation? Cool. A minute. Have you understood FMP calculation? Just check it. Okay. Now we'll calculate closing capital employed because we want average capital employed. Yes, sir. So point number B. Write down. Calculation of closing capital employed as at which date? So they have given the balance sheet as on 31st March 2003. Means we are calculating closing capital employed of this year. Of this year, now 2003 means correct now. We are calculating for 2002 2003. Okay, 31st March 2003. We will take all asset. Can we take all asset? You can see in this particular question they have not given any fair value information. Means all asset, all liability will be taken at what? Book value only. You can use one shortcut. It is the total asset at book value. You can only deduct goodwill and non-trade investment and preliminary expense, or you add now whatever is required, that only you add. Why to go for shortcut? I will say don't go for shortcut. We write down land and building. I am writing LMB in exam, so you should write down full. Land and building, how much? Can you say? This is 1850. It is also in lakhs. 1850 rupees in lakhs. Then we have what? Machinery. Machinery 3760. Then what we have? Then we have furniture and fitting. Can you give me? Means I am just writing because you have the book. 1015. Then we have patent and trademark. Patent and trademark, how much? That is 32. Then we have stock. Stock we have 873. Then we have debtor. that is what, 614. Then we have cash and bank. Cash and bank we have 546. Okay, sir. Can you give me the total? Coming 1850 plus 3760 plus 1015 plus 32 plus 873 plus 614 plus 546 is equal to, it is 8690. This become total asset. From this less liabilities, we have two liabilities. One we have trade creditor. How much? How much is given? You can see creditor we have 568. Return 568. And one we have provision for tax. Provision for tax, how much we have? 22. Proposed dividend will not come. It is 568 plus 22 is equal to 590. So minus 590. So this will become closing capital employed. We'll call it CC, closing capital employed. That is 8,100. 8,100 is closing capital employed. Simple. Correct. But we want average capital employed. Write down point number C. Calculation of average capital employed. We will start with CC. We have closing capital employed how much? 8,100. From this will minus half adjusted profit after tax of which year? Of 2002, 2003, of the immediate last year. So already we calculated adjusted profit, but case this is PBT, but we want PAT. So what is the tax rate of this year? Not future year. Here also you can do mistake. What was the tax rate of 2-3? We can see the tax rate of 2-3 is 38. So this was relevant actually. 38% were relevant. 38% were relevant. Okay. So we will do. So it is 2846. So just write down. How much PBT? PBT is given how much? 2846. From this minus tax at a rate of 38%. So 2846 into 38% is equal to 1081. So this becomes PAT minus equal to, it is 1765. Then we'll take 50%, means half of PAT, that is 50% of 1765. That only will take now. That is equal to, into half means 50%. We will take 882. We can say 882. So this become average capital employed. Got this point? So your average capital employed is equal to 8,100 minus 882 is equal to 7218. Are you getting what calculation we are doing? 7218. Chalega. Any doubt? Easy. Bolo. Super easy. Now we can find out point number D, means valuation of goodwill. So now we'll do calculation of goodwill, which is our main solution. So whatever we have done above, that was actually working note. You can just write a working note number A, B, C. Okay. Correct. So first we write on FMP. How much FMP we calculated? That was 1843. All are in lakhs. If you want to write on again, write on what? In lakhs. 1843. Then from this we'll deduct normal profit. Now normal profit will be what? We need to apply normal rate of return on average capital employed to what is the average capital employed and what is the NROI given. NROI given 20%. You can say 20%. It is 20% of average capital employed. Right on 20% of average capital employed, that is 7218. 7218. So 20%, it is 144 approximately, rounding off. So this becomes super profit. So how much super profit? It is 1843 minus 1444 is equal to 399, or you can say 400 also if you want to write down 400. Means for rounding off you can do it is 3. That also you can do 3. So it becomes 400. Okay, sir. Or you can add on 399. There is no, or you can add on decimal also. This is your choice. Therefore, goodwill is equal to, therefore goodwill is equal to super profit multiplied by number of years purchase 400 and number of years purchase given 3. So goodwill is equal to how much? 1200. 1200, this is rupees in lakhs. Understood? Simple. I hope you are understanding. Chalega. Now we are only taking question for understanding the concept. Once you have understood the concept, then we'll take some question from CMA book also. Okay. Any doubt? Chalega. Can we take one more question? Come to the next question. Question number 12. Negotiation is going on for transfer of X Limited on the basis of balance sheet and additional information as given below. Means share capital, reserve and surplus, sundry creditor. This is creditor. Goodwill, 1 second, if question is silent, will not take. Land and building, plant and machinery, investment. If the question is silent, it will not be taken. If the question is silent, we need to see whether question says it is trade or non-trade. Question silent or non-trade. Stock, data, cash and bank. This will be taken into consideration. Profit before tax for 97-90 or 87-88 amounted to 6 lakh. Which you can see they have given only last year profit. Whenever last year profit is given, that profit will be only considered to find out average profit. Only 1 year profit is given, there is no need to find out average. That profit will only become FMP. You need to find out adjusted profit of last year only. Got this point? Including 10,000 as interest on investment. So including, so one thing we have understood that if they have given interest or investment, so investment is non-trade only. However, additional amount of 50,000 per annum shall be required to be spent on a smooth running of business. Additional amount, so can I say this become additional expense of future? Additional expense of future. Market value of land and building and plant and machinery. So for this market value has been given. For plant and machinery also market value has been given, estimate 9 lakh and 10 lakh. In order to match the above figure, further depreciation to the extent of 40,000 should be taken into consideration. So in order to match the above figure, further depreciation to be extent of 40,000 should be taken into consideration. Just try to understand. This I will explain at the end. This is a new point. I will explain at the end. Income tax rate may be taken at 50%. Okay, income tax rate may be taken at 50%. Of course, they have given future tax rate. Return on capital employed is 20% before tax may be considered normal for the business at present stage. Now you can see this is 20%. It is pre-tax. Before tax means pre-tax, but we are calculating FMP after tax. So it means we want normal rate of return after tax. So this need to be converted at what? After tax. This is also very important. Whenever NROR is given, question is silent, always will assume it is after tax. But in this question, they have given to confuse you that this is pre-tax, we need to make it post-tax. So 50% is the tax rate. So of course, the post-tax, yeah, after tax NROR will be 20% into 50% means 10%. That you need to be careful. Okay, yes, sir. For the purpose of determining the rate of return, profit for this year after the aforesaid adjustment may be taken as expected average profit. This is given, even though not given, it is average profit only. Similarly, average trading capital employed is also considered on the basis of positioning this year. So average, they have said average trading capital employed trading means invested in business. Correct now. So average we need to calculate. It has been assumed, agreed that 4-year purchase of super profit shall be taken as the value of goodwill for the purpose of deal. You are required to calculate the value of goodwill of the company. Okay, sir. Can we take? Yes, sir. We are doing question number 12. Question number 12. So first we'll calculate FMP. Write down. Calculation of FMP. Correct. So they have given only profit of 87, 88. Okay. They have given profit after tax, profit before tax. Check karo. They have given profit before tax. Okay, so 6 lakh. So no adjustment for tax expense. Profit before tax 6 lakh. Okay, sir. Here is from this we'll do less. Only one adjustment, that is non-operating income adjustment. There is one interest on investment. Interest on investment means non-operating income. How much? 10,000. So can you say this will be only adjusted profit, means this will be only average profit. So this is average profit. How much? 5,90,000. Average, or you can say adjusted profit. Adjusted profit. Now from this we need to calculate, we need to minus additional expense. They have given there is one additional expense for smooth running of business. So this is the adjusted profit of this year. Now this is the average profit. Now we are converting into future profit. So in future there is some additional expense that need to be deducted. Correct now. Less additional expense of how much? It is 50,000. Okay. This much, I think, no doubt. Just try to understand. If you are deducting 10,000 and without calculating average profit, you are deducting 50,000, you will get FMP. But you want this average profit to calculate average capital employed. So this adjusted profit need to be calculated, because this is the profit of this year. Now you are converting profit of last year into what? Future year. That you need to understand. We are converting adjusted profit in future profit. Got this point? Are you able to understand? Yes, sir. Now what happened? There was some revaluation of PP, property, plant, equipment, or fixed asset at the end of the year. So because of that revaluation, in the next year there will be some additional depreciation, because if you have done revaluation at year end, so next year you will calculate depreciation on the higher amount, and because there will be some additional depreciation, so additional depreciation will become the future expense. So that need to be deducted after this. So we'll do from this less additional depreciation, additional depreciation how much they have given? Check karo. In order to match the above figure, which figure? This revaluation, further depreciation, future depreciation to the extent of 40,000 should be taken into consideration. Means this is to convert the past year profit in future profit. So what we are doing, we are converting the past year profit in future maintainable profit. So this additional depreciation, this depreciation is not the last year depreciation, this is the future year depreciation. That you need to understand. Got this point? So if you are deducting here, it means you are just changing the last year profit. We can't change the last year profit. Got this point? You need to understand what to deduct from where. Chalega. So additional depreciation of how much? 40,000 will be deducted from this, and this will become FMP. This will become FMP before tax. How much? So 5,90,000 minus 90 is equal to 5,90,000 minus 90 is equal to 5 lakh. From this tax, and they have given 50%. So tax at 50% is 2,50,000. What is FMP? FMP is equal to 2,50,000. Okay, sir. This is also done. Chalega. Now we need to calculate closing capital employed. Let us calculate closing capital employed. Point number B. Calculation of closing capital employed. Calculation of closing capital employed. All assets at fair value. Let us take one by one. We'll start with land and building, and for land and building it is given 9 lakh, and for plant MSC it is given 10 lakh. So be careful. Okay, 9 lakh and 10 lakh. Add on. Land and building is 9 lakh. Plant and machinery it is 10 lakh. Then other asset and liability at book value only. Can we take stock? You have the book, okay. 2 lakh. Debtor it is 1,50,000. Investment will not take. Investment is non-trade. Okay. Yes, sir. Then cash and bank it is how much? 50,000. Okay, sir. You can see we have taken that only. We have taken 2 lakh, 1,50,000 and 50,000. Okay. Total. What is the total assets? It is 19. 19 plus 2 plus 1.5 plus 0.5. It is 23 lakh. From this less liability, we have only one liability, that is sundry creditor. How much creditor they have given? Check karo. They have given 3 lakh, so minus 3 lakh. So your closing capital employed will become how much? 20 lakh. Now we need to convert closing capital employed into average capital employed. So point number C. Calculation of average capital employed. We'll start with CC is equal to 20 lakh. From this, what we deduct? Minus, less, half PAT. Of which year? Of which year? That is this year only. 87, 87, 88. 87, 88. Of 87, 88. Correct now. Got this point. You can see you have calculated this adjusted profit. So you need to take which? Whether you will take this 2 lakh 50, 5 lakh, or you will take 5 lakh 90. There is a doubt. So we need to calculate the 87, 88 profit, and there that is adjusted profit of 5 lakh 90,000. This we need to consider 5 lakh 90,000. Here only you will do mistake. Okay. It means we need to find out what? First PBT. So PBT is how much? PBT is how much? 5 lakh 90,000. Less tax at 50%, because nothing has given, we'll assume the future year and past year tax rate is same. So 5 lakh 90 divided by 2 is 2 lakh 95,000. Actually PAT become how much? 2 lakh 95,000. Correct. Now we take 50% of 2 lakh 95,000 divided by 2. It is 1 lakh 47,500. It will come 20 lakh minus 1 lakh 47,500. So your closing capital employed is how, sorry, average capital employed is equal to how much? 18 lakh 52,500. This is average capital employed. Now we can find out goodwill. But before that, here is if we want NROR also, because they have given before tax, we need to convert into after tax. Okay, madam. Normal rate of return. So they have given NROR before tax. How much? 50%. Less tax at 50%, that is 20. Oh, sorry, my mistake. And ROI is given how much? 20%, my mistake. And less tax at 50% is 10%, means 50% or 20%. So your NROR after tax is equal to 10%. Okay, sir. Now calculate what goodwill. Now calculation of goodwill, main solution. So first we'll calculate FMP. Already we calculated. How much FMP we calculated? 2,50,000. From this we'll minus normal profit. What is normal profit? Normal profit is equal to 10% of average capital employed. What is the average capital employed? 18,52,500. Is 18,52,500. It is 1,85,250. 1,85,250. So what is the super profit? Super profit is equal to how much? That is 64,750. Therefore, goodwill is equal to super profit multiplied by number of years purchase. That is 64,750. What is the number of year purchase given? Check. It is 4 year. 64,750 into 4 is equal to how much? The question cannot be easier than this. What do you want? You can easily score 10 out of 10 in this. Okay. But abhi, what? Entire discussion left, because valuation of goodwill, then valuation sales, then valuation of business is also there. The chapter is not yet completed. And we'll do a lot of questions. Nothing to worry about that. So your 2,59,000 become what? Become what? Goodwill valuation. Okay. Any doubt? No doubt. Chalega. We'll take a small break. After break, we'll take some more questions. Okay, sir? Yes, sir. Now, can we start once again? Everyone, yes, sir. We'll come to one of the exam question 17. And you can see this question is similar to last question, whatever I have taken from ICMAI resource. And this will help you to understand that why I am taking question from ICMAI resource. Because sometime in CMA exam, they will take exactly the question what was given here, what we have in ICAI resource. Okay, yes, sir. The following figure have been extracted from the balance sheet of R Limited as on 31st March 2023. You can see equity share, preference share, other equity, 12% debenture liability, trade payable liability, PP liability, goodwill, self-generated, non-current investment, it is non-trading, will not come, current asset will come. You can see after this all the information will be similar to last question. PBT for the year amounted rupees 8,40,000 including 14,000 as interest on investment. Same point. An additional amount of 70,000 per annum shall be required to be spent for smooth running of business. Same point. Market value of PPI estimated to be 26,60,000 in order to, for this market value has been given. In order to match the above figure, further depreciation to the extent of 56,000 should be taken into consideration. Same point. Only this point is a new. Additional depreciation is not tax deductible. Means on additional depreciation, it is not tax deductible. It means we need to ignore tax on that. This is one special point. Income tax rate 50%. Return on capital employed 20% before tax. This is before tax. May be considered normal for the business at present stage for the purpose of determining the rate of return. The profit for this year after the aforesaid adjustment may be taken as expected average profit. Okay. The profit of this year after above adjustment will be considered as expected average profit. Same point was given in previous question. Consider average trading capital employed for determining the normal profit. Same point. Based on above details, you are required to compute a value of goodwill based on 4 years purchase super profit. Working should form part of your answer. It was asked in exam. But for this, the solution was not given. Only the value of goodwill was given. But I am not able to understand how it has been calculated. So I will use my concept to find out the value of goodwill. Believe me, I don't understand from where they have got this answer. Okay, sir? Yes, sir. We will apply our solution. We are doing question number 17. Question number 17. So first point number A will do calculation of FMP. Calculation of FMP. So they have given the profit of each year. They have given PBT of 20 to 23. Right on 22, 23. They have given PBT. How much they have given? 8,40,000. From this will minus less interest on investment, that is given 14,000. So this will become adjusted profit, or you can say average profit, or because it is 1 year profit, or it is adjusted profit. Adjusted profit. How much? 8,40,000 minus 14,000 is equal to 8,26,000. Correct. Then from that we'll do less additional expense. Additional expense, that is how much? 70,000. Then we'll do less. There is some further depreciation, additional depreciation. Additional depreciation, how much they have given? They have given 56,000. Same to same we are doing. So this will become FMP before tax. FMP before tax. 8,26,000 minus 70 minus 56,000, that is 7 lakh. Now only one point will change, less tax at a rate of 50%. Now tax will be calculated on this minus this, because this is not tax deductible. This additional depreciation is permanently disallowed. You will understand when you do Ind AS 12. Okay, I hope you have done AS 22. So actually it is an item of permanent difference, so we don't calculate any tax on that. Okay, got this point? So it is not tax deductible. It will be 8,26,000 minus 70 into 50%. So 8,26,000 minus 70 into 50%, coming 3,78,000. Actually your FMP is how much? Future maintainable profit minus 7 lakh is 3,22,000. This is your FMP. Now we'll come to point number B. Calculation of closing capital employed. Closing capital employed. Can we start? We write down property, plant and equipment that they have given at market value, that is 26,60,000. Write down 26,60,000. Okay. Plus, will not take goodwill, will not take non-current investment, will take current asset 5,60,000. So plus current asset 5,60,000. What is the total? Is 26,60,000 plus 5,60,000 become 32,20,000. From this we'll do less all the liabilities. They have given liabilities may, if you see, they have given 12% debenture 2,80,000. Write down 12% debenture 2,80,000, and they have given trade payable. Trade payable, how much they have given? 1,40,000. Trade payable, they have given 1,40,000. Are you getting what I am saying? So 2,80,000 plus 1,40,000, it is 4,20,000. So this will deduct. So 32,20,000 minus 4,20,000. The closing capital employed will be 28 lakh. Okay, this will become closing capital employed. Now point number C, will calculate average capital employed. Calculation of average capital employed. We'll start with closing capital employed is how much? 28 lakh less half adjusted PAT of which year? That is 22, 23. 22, 23. What is the profit before tax? Already we calculated. How much we calculated? We'll take 8,26,000. We'll take 8,26,000. 8,26,000. From this, we'll do less tax at 50%. So 8,26,000, 50% is 4,13,000. It is PAT 4,13,000. Then we'll take 50% of 4,13,000. Correct now? 50%. That will come 206,500. So this will become average capital employed. So minus, we'll do 28 lakh. That is 25,93,500. Got this point? This you have understood. Now, NROR to we have understood. NROR will be after tax. After tax, it will be 20% given. Before tax, we will take 50%. That will be 10%. Correct. Now we can calculate goodwill. Goodwill. So first we write on FMP. FMP is how much? You can say 3,22,000. 3,22,000. Then less normal profit, that is equal to 10% of average capital employed, that is 25,93,500, that is 2,59,350. So it means super profit is equal to 62,650. Therefore, goodwill is equal to 62,650 into 4. Same thing, no explanation required. It is 2,50,600. This is the goodwill. So as per my calculation, this is the goodwill. Got this point? Are you able to understand? This is the answer. Now what alternative we can do? If I will say, chalo, let us do permutation combination. It is quite possible they may have considered goodwill as purchase goodwill. Quite possible. So let me consider goodwill as purchase goodwill. So if you add 1,40,000, chalo add karte. Let us add. So it will be actually 28 lakh plus 1,40,000, 29,40,000. Then it will become 29,40,000. This will become 29,40,000. 29,40,000 minus 206,500. That will become 27,33,500. Okay, correct. Then if we'll take 10% of these, 10%. Don't write. So this will be 27,3350. Okay. So 3,22,000 minus 27,3350 is equal to 40,650 into 4. It is also coming 1,94,000 something. So it means somewhere we don't know how the answer is coming. We can do some permutation combination, but we are not getting the same answer. So from my point of view, this is the best solution. From my point of view, this is the best solution we have. And I hope you are happy with this. How they have got the answer, they have not given the calculation for that. I can't identify where they have done a mistake. Where they have done the mistake. Okay, that we don't know. Are we just understanding what I am saying? Correct. So let us forget on that part. This is the best solution I have given, because in exam you will not have solution now. In exam you don't have solution, so you need to apply your concept, and this is the concept. Only a new point was there. What was the new point? This was the new point. By additional depreciation, it was not tax deductible. Because it was not tax deductible, therefore we have not considered that depreciation for calculation of tax. Okay, sir. Got this point? I hope you have understood the solution. Any doubt? No doubt. We'll take one more question. Come to question number 13. This is also a good question. The following balance sheet of ABC Limited as at 31st March 2004 is prepared to you. Authorize, once again, authorize is not at all relevant. Issued and subscribed fully paid up equity shares 5,000. Securities premium, it is securities premium is 500. General reserve, PL accounts, and these all are not relevant, because reserve and surplus is not a liability. Sundry creditor we have 1204. Provision for tax we have 110. Plant and machinery, furniture and fixture, trademark matter, stock, debtor, cash and bank. This all will be taken into consider for closing capital employed. Cost of issue of shares, this is one type of what? Loss. This loss should be charged to PL account, till now not charged to PL account, so this is not an asset. This is not an asset. Understood point? The book profit before taxation for the last 4 years has been given as follows. So you can see the book profit has been given for the last 4 years. You can see this is for 0001, this is for 0102, 0203 and 0304. Okay, sir. And the balance sheet has been given as on 31st March 2004. Okay, sir. Provision for income tax in each one of the above mentioned 4 years had been at 35%. So provision for income tax is at 35%. But the question is silent whether it is PAT or PBT. You can see they have given profit. But what you should assume it is given the book profit before tax. Sorry, my mistake. It is profit before tax is given. So of course, if profit before tax is given, no adjustment for tax expense. As scrutiny of the above mentioned balance sheet as on 31st March 2004 revealed that scrutiny means there is some error. So this error need to be rectified. We rectify the error. The stock should have been valued at 1230. So what is the valuation? You can see they have done 1265 and we should value at what? 1230. It means we should reduce the stock. If you reduce the stock, your profit will also reduce. So this is one error need to be adjusted. At that amounting to rupees 20 lakh is really bad, but has not been written off. So bad debt, your data will reduce and you need to also charge it to PL account. A liability of 5 lakh for damages exists but not yet recorded in the books of account. You recorded book in your books of account. So what is the journal entry? The liability is there for damages. What journal entry? You will say PL accountability liability. Your profit will decrease. So this need to be adjusted in your books of account. It is decided the necessary adjustment is made in the books of account for the above mentioned matter. Of course, we'll do that. And can is for that, if you will do the necessary adjustment in your books of account, so your assets and liability will be also affected. So just think about that. Whenever you are calculating closing capital employed, the closing capital employed should be calculated by considering the correct value. Got this mind? So this also need to be taken into consideration for closing capital employed also. Okay, sir. You are also further informed that there used to be an annual income of 1 crore from non-trade investment till accounting year ended 31st March 2002. So there is some non-trade income till which year? 31st March 2002. It means up to first and second year. So first year, second year, there will be some adjustment for non-operating income. During the year ended 31st March 2002, there was a special income of 150 lakh due to an internal affair. So this need to be eliminated. Due to an earthquake, the company suffered a loss of 75 lakh during the year 2002-2003. The loss was not covered by the insurance policy. This is an abnormal loss. You are required to calculate the value of goodwill of company at 4-year purchase of the super profit of company, assuming that additional remuneration amounting to rupees 70 lakh annually will be paid to the actor in the year to come, and the rate of taxation of this year will be 40%. So there is some additional remuneration and the future tax rate is given how much? It is given 40%. Assume that NROR expected in the industry is 20% of capital employed. You can see now they have not given anything. It is not given before tax or after tax. So always it will be after tax. You can't assume it by your own. It is before tax. Okay. For the capital employed. Okay, sir. This is the question. Good question. I will say good quality of question. Can we take? Yes, sir. So we are doing question number 13. Come to question number 13. So first we'll do, now we write down working note number 1. Calculation of FMP. They have given 4-year profit. 0001, 0102, 0203, 0304. They have given PBT, profit before tax. How much they have given? Bata. It is 4,100, 2725, 3,200 and 3060. Okay, this is the profit before tax they have given. We have written from these 4,100, 2725, 3,200, 3060. Now there are some error. The first error they have given stock should have been valued at 1230. It was actually valued at 1265. So it is quite possible NRV is what? Less than cost price. So this NRV should be written, the loss should be written down. Correct now. Loss should be charged to PL account. So this is how much loss? 1265 minus 1230. It is 35. So write down less less less. There is some loss on stock. Loss on stock. How much? 35 minus. Okay. Then there is one bad debt. Bad debt amounted to rupees how much? 20 lakh. That need to be also deducted from profit. Minus bad debt. How much? That is 20 lakh. And then there is some expense which is not a recorded liability for 5 lakh for damages. Correct. That need to be recorded. Minus liability for damages. How much? 5 lakh. So this is the correction required and correction done. So for this assets and liability need to be also corrected. That be careful. Okay. Okay, sir. Then there are some adjustment given for what? Non-operating income, extraordinary income means non-recurring income, etc. So first they have given non-operating income of 1 crore, but for first 2 years. So 1 crore means 100 lakh, 100 lakh. Be careful for that. We'll do minus non-operating income. That is 100 lakh for the first 2 years. Okay, sir. Then they have given there is some special income of which year? Of 0102. So 0102 will be this second year. Minus there is some special income which is of non-recurring in nature. What is the amount? That is 150 lakh. Okay, special income deducted. Then there is some loss due to earthquake of 75 lakh in 2-3. So 2-3 is which year? Check karo. This is 2-3. Minus, loss, abnormal loss. We'll do plus, we'll add back. Abnormal loss due to earthquake is how much? It is 75. Now we'll get adjusted profit. Can you give me adjusted profit? Adjusted profit. How much? Is 4,100 minus 100. It is 4,000. Then 2725 minus 100 minus 150. That is 2475. Then 3,200 minus 75. It is how much? It is plus, huh? It was plus. So 3275. Then 3060 minus 35 minus 20 minus 5. It is 3,000. We have got adjusted profit, and you can see there is no trend. We'll apply simple average profit. So apply simple average profit. It is 4,000 plus 2475 plus 3275 plus 3,000. Total is what? divided by 4. How much? Coming 3187.50. If you want to write down 0.50, write down. Then from these, we'll deduct some additional remuneration. It's given in the question. Additional remuneration, future remuneration. How much it is given? It is given additional remuneration of 70 lakh. So minus 70 lakh, and there is no additional depreciation. No, because the rate of depreciation is not given. You can't calculate that. Okay. You can see they are not given any rate of depreciation. Nothing has been given. Okay. And there is no information about what? The revaluation of asset also. Chalega. Yes, sir. So this become FMP before tax. FMP before tax. So minus 70 it is coming. How much? 3117.50. Now less tax at what rate? What is the future tax rate given? Check karo. The future tax rate is given 40%. Be careful, huh? Because initially it was given how much rate? So normally student take this rate 35%. This is the past tax rate. This is future tax rate 40%. Okay. So at a rate of 40%. So into 40%, how much? This is 1247.00. What is FMP after tax? So that will be equal to 1870.50. Got this point? Yes, sir. Simple. Any doubt in this calculation? Batao. Now be careful about these three adjustments. This need to be adjusted in closing capital employed. Write down somewhere. One note. Any error given in question should be also adjusted in closing capital employed. This should be also adjusted to calculate closing capital employed. Okay, so be careful about it. Now we'll do working note number 2. Calculation of closing capital employed. Okay, sir. One by one. First, they are given plant and machinery. So no information about fair value is given. We'll take book value. So plant and machinery is 4780. All in lakhs. Okay. 4780. Then we have furniture and fitting. It is 1090. Then we have trademark and patent. How much it is given? 20. Then we have stock. Be careful. Stock how much given? 1265. But from this we'll do minus what? 35. So it will be 1230. Means whatever the valuation has been given, that after correction that will be 1230. Then debtor. Be careful. Debtor how much given? You can see it is given how much? 644. But there is a bad debt. Bad debt of how much? 20 lakh. It will take 624. Will take 624. Then there is a cash and bank. Cash and bank. So no adjustment. It is 1415. Can you give me the total? It is 4780 plus 1090 plus 20 plus 1230 plus 624. Then 1415. That is equal to 9159. From this we'll deduct what? Liabilities. All the liabilities. What we have? First we have sundry creditor. Correct. So there is one liability for damage that will increase your liability now. So sundry for creditor how much? Sundry creditor how much? Is given 1204. Will increase by 5. So 1204 plus 5 liability for damage, it will be 1209, and there is one provision for tax also. Provision for tax is 110. This will deduct, so this will be your closing capital employed. So closing capital employed minus 1209 minus 110 is equal to 7840. This is coming 7840, your closing capital employed. Now we'll calculate what? Average capital employed. Working note number 3, calculation of average capital employed. We have closing capital employed 7840. We'll do minus half adjusted profit after tax of which year? Of the last year. Last year is what? It is 2003-04. This you need to understand, 03-04. So already PBT we have calculated. Adjusted PBT is how much? Adjusted PBT is 3000. So we'll consider this now 3000. Now don't take average profit. The last question there was only 1 year. The average profit and adjusted profit were same. So here you will take 3000. Okay. This is 3000. Now from this less tax. Now tax at what rate? Tax at past tax rate. So what was the past tax rate? It was how much? 35%. Here also be careful. 35%. So tax at 35%. So 3000 into 35% is equal to 1050. What is the PAT? PAT is equal to what? 1950. Now we'll take 50% of PAT. So 50% of 1950 into 50%, how much? 975. So deduct 975. We'll get average capital employed. Average capital employed minus 7840. So we'll get 6865. So your average capital employed is 6865. Now we can calculate goodwill. Understood this much. Coming to calculation of, this is the main solution. Calculation of goodwill. Written FMP. What is your FMP? It is 1870.50. From this deduct normal profit. So your NROR is given how much? Check karo. So NROR is given at the end 20%. 20% of average capital employed. We'll calculate 20% of average capital employed. What is your average capital employed? 6865. It is 6865. So 20%, it is coming 1373.00. What is your super profit? Super profit, that is 497.5. 497.50. Your goodwill, therefore goodwill is equal to super profit multiplied by number of year purchase. Now what is the number of year purchase given? It is 4 years. 497.5 into 4. The answer is what? 1990. This is the answer. Easy. It is very easy. Got this point? Chalega. So it was given at 4-year purchase. So I'm just doing all the questions so that you will become habit. Because if I will not do, you will also not do. I can also explain, but you do practice. It will make you more practice. It will be a practice for you. You will take almost all the questions. There are similar type of questions. For that solution is given, you can do that. But wherever doubt may come, I will do it. And this chapter is actually a lot of confusion because we are taking assumption, and sometimes institute is doing one question with some other adjustment, and the same type of question doing with some other adjustment. Therefore, I have made one standard rule. This is the only plus minus we are supposed to do. Correct now? Means I will take one question where they have done some other adjustment and we have taken some other adjustment. But can I say, we need to understand what is the standard rules. Correct? So this is the basic thing which we need to understand, and we are applying that in all questions. Okay. So today this much only. Once you revise again, correct, you can do some questions by your own. I will say if you want to do, you can take some questions. I'll just give you. You can try that questions. Okay. Do question number 9. Question 9. Doubt may come. Okay. And do this question also. Question number 8. Question number 8 and 9 you do. I will also take these questions. Okay, sir. Got this point. To this much only. Thank you very much. We'll meet next day. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye. Love you all. Okay. Bye bye.